Good day, traders. Welcome back to Fides Trading Channel, and we are back again with another Fides Flows video. Today is the daily market brief for Friday, the 18th of July, 2025. If you're new to this channel, in these Fides Flows videos, I do a deep dive into the price action and fundamentals behind gold, Nas100, and Us30, giving you a clear roadmap for the trading day ahead. Using high time frame technical analysis, I identify key zones, momentum shifts, and trend structures, and then combine that with real-time macroeconomic drivers like interest rate, inflation data, and market sentiment. So whether you're a swing trader or day trader, this breakdown helps you understand what's really moving these markets and where high probability setups might form. So starting with the gold market, gold is currently trading at 3358.7. This week for the gold market, it's been very turbulent, very choppy. Just starting with how the price moved during the week ahead. We can observe that on Monday, we had a bit of a bullish push from, Monday, we had a significantly strong bearish push from the early hours of the morning. Markets moved steady bullish. And then on Tuesday, we had a spike to the upside before firmly dropping during the New York session. Actually, I think I'm going to drop into the 1 hour time frame just to explain this a bit better. But from what we can observe, price is trading above the 200 and the 50 SMA. We are trading in the bullish region of the RSI, although markets are kind of consolidatory on the 4 hour at the moment. We can see that we're trading between the 3392 and the 3300 pivot points, and we are testing that 3351 level right now as we have throughout the week. So yeah, as I was saying, the markets have been pretty choppy through the week, and I just want to see what movements took place. So we can see that at the opening of the markets, we had a huge gap to the upside. Markets dropped during the Asian session before firmly recovering during during London. And then during the New York session, markets had a significant drop from the 3373 level on that Monday, falling firmly before finding support at 3342 below that pivot level. On Tuesday, we had a strong rebound during the Asian session, and then during the New York session, markets sharply dropped again. Market directionality for this week was insane. It was very hard to actually button down what it was doing, because then after that massive move on Tuesday, price found support at 3302. It was pretty stable during the Asian session. We started to see signs of bull stepping in, but then again during the New York session on Wednesday, markets had a firm spike to the upside, and it actually created this massive wick rejection that we can see here on the 1 hour. I mean, price reached beyond the resistance at 3373 before sharply declining, and then using the pivot level at 3351 as a turning point during the latter hours of the New York session on that Wednesday. Then on Thursday, we saw that the markets just continued to fall using that bearish momentum. Asian session, it was bearish. Markets fell all the way down until the New York session. Then once the New York session kicked in again, bull stepped in, pushed the market higher, and now we're actually sitting above the pivot point. So very unpredictable market this week. It was extremely difficult to actually pinpoint the market directionality, but it was awesome if you were a scalp trader. I think as a scalp trader, I made some money here, I made some money there, but this is nearly a 70-point difference between the highs and lows of the trading range during this week. So super volatile movements. If you did make money, well done, because it was a challenging market this week. That being said, taking a look at the markets for today, we can see that during the Asian session, we had a bit of bearish movement until about 8 o'clock. At 8 o'clock, we had a massive bullish candle off the Asian lows at 3332. Markets firmly pushed higher. We can see that price was trading upon the 2150 and 200 moving average here on the 1 hour and had a firm spike to the upside. Looking at the RSI, we're clearly trading with bullish momentum. We're in the bullish range of the RSI above 55, and it seems that the bullish momentum is going to continue throughout the day. Now, the price is on an impulse move, so I would need to wait for some sort of retracement before I take a trade. Where am I potentially looking for a retracement? Well, based on the 1 hour time frame, I'm looking at the pivot level at 3351 or the Asia highs at 3350. Now, price coming back there, showing me a few candles, nice bearish candle sitting there, giving me a wick rejection. I will then enter on the 5-minute chart. So taking a look at the 5-minute chart, let's just see what we can observe. On the 5-minute chart, we can see that the bulls are in firm control since 8 this morning. Clearly strong spikes to the upside, price trading above the 2150 and 200 moving average, which is showing bearish signs with the curvature to the upside. Price traded in the overextended ranges during that initial spike to the upside, about 10 o'clock, then retraced. Continues pushing higher, but I am observing that there is some RSI divergence that is taking place. Where we see RSI divergence is that price is creating new higher highs. So we can see the new higher highs that are being created. However, the peaks are getting lower on the RSI, which is clearly indicating that momentum is slowing down on the 5-minute chart. So we will see a retracement sometime soon. What I'll be looking for this retracement is for price to come back, possibly test 21 SMA, this level of significance here at 3351, or again 3350. Anywhere within that zone, if I get a wick rejection, I will be looking for an entry and riding that wave to the upside. Just coming back to the 1 hour, riding that wave to the upside, potentially to 3373. You can see we did get massive range in this market, so it's not unrealistic to think that we could get back up to that session. But yeah, super volatile session this week, definitely worth taking a look at, perhaps even doing a video on its own. So current gold price 3358, futures price 3363. That's a 5-point difference for bullish confluence, and yeah, supporting the bullish theory that we have for this market. Taking a look at US Tech, or rather Nas100. So Nas100 for the majority of the week has been very bullish, but was not exempt from the extreme choppiness that we had from the news releases throughout the week. So we had a lot of news releases that supported dollar strength. That's what this market tumbling and then firmly recovering after that. So on the 4-hour chart, we can observe price trading above the 21 SMA, above the 50 SMA, and the 200 SMA, which has nice curvature to the upside. We also have a bullish support trend line, which is still very much intact and has actually been tested for a third time. You can see one bounce here, one bounce here, one bounce here, and then the first initial bounce, which we have at the bottom there. So clearly, bullish structure is still very, very much intact. Also just noting that RSI is trading in the bullish region of the RSI above 55. Dropping to the 1-hour time frame, we can observe that throughout the week, price was, sorry, I just want to get my bearings here. There we go. Price opened with a gap to the downside, then firmly recovered during the London session. On Monday, strong push to the upside, which continued throughout the Asian session. This continued throughout Tuesday until we got to the New York session on Tuesday. And we saw a lot of volatility stepping in until about 8 o'clock during the tail end of the New York session. Then the market firmly dipped. Can see a lot of choppiness here. There was a lot of consolidation during that period on Tuesday. And then Wednesday, early hours, not much happening until New York session open. Again, markets firmly dropped, strong drop to the downside, created this very interesting candle. It's actually a doji, but it's a long wick doji. And it actually nearly tapped into the 22,650 level. Price getting very close there before firmly retracing and having that strong push to the upside. We can see our markets are consolidating, but throughout lesser parts of Wednesday, most of Thursday, markets were firmly bullish, and we have actually created new highs, peaking at 23140 during the Asian session highs of the day. Currently, as it stands, market is consolidating. We can also see on the 1-hour time frame, price trading above the 21 and the 50 SMA at the moment. So clearly, impulse move is in play. Also, just observing price trading in the bullish region of the RSI above 55. We did have some form of RSI divergence right there. Price dropping, but creating peaks. So yeah, potentially seeing a retracement. We have been potentially looking for an entry on this retracement is at 2297 or just potentially the support level of 23070. Again, we need to get into the nitty-gritty of the markets and actually see the retracement taking place before we look for some sort of entry. So yeah, I'm just going to play this one by ear. I might not even get an entry today. Taking a look at Us30. Well, Us30, a lot more choppy than its counterpart, Nas100 during the week. We can see that on Monday, markets firmly dropped, didn't really do much on, sorry, let me start here. Yeah, on Monday, markets firmly pushed the upside. Tuesday dropped. Wednesday, it was pretty stationary, created the wick rejection, and then Thursday pushed bullish. So, you know what? Actually, very similar to its counterpart, just didn't show strong signs of bullish momentum. So, per the 4-hour chart, we are trading above the 21 and the 50 SMA, but we can see that we dropped below these levels before firmly recovering. We are trading in the bullish region of the RSI at the moment, trading above 55, which is beautiful to see, and we have a bullish support trend line, which is still very, very much intact. So this adds extra momentum to the bullish movements that we are seeing. Per the 1-hour time frame, we can kind of see the movements a little bit better. So Monday, significant drop. We had that beautiful wick rejection off the 200 SMA on the 1-hour chart on Wednesday, and then Thursday firmly pushing to the upside. And today, we're just kind of floating within a consolidation phase. Clearly momentum giving up, but I wouldn't be surprised to see people taking profits or taking some positions during the New York session, especially because it's Friday. In terms of the moving averages, there's not much to really report. I mean, moving averages trading one on top of the other. So yeah, on the 1-hour time frame, not much to report on the moving averages, but we are trading in the bullish region of the RSI, hitting those overextended ranges and then obviously providing corrections. We are in a bit of a correction phase right now, but like I mentioned earlier, market directionality has been very, very unstable when it comes to US30. I mean, right now I'm seeing bullish movement, so I would be looking for longs. But in terms of how I'm looking to take these positions, down. It's very difficult to read. So I would say we have a support here at 44516. So that's a potential level to actually look at for push to the upside. Price trading very close to that sweet spot region as well. But we also have a lot of fair value gaps right there. And then price trading close to 21 and 50 SMA. I mean, if it gets back in there and taps in, I think that will give me more of a confluence trade to the upside. So that is US30. Moving on to the VIX index, we can see the VIX is in risk on territory, trading at 16.57 or 16.50 from the opening of the week at 17.73. VIX also saw a lot of chop this week. We can see a lot of volatility in this particular chart. It seems investors have absorbed the news of the tariffs and are comfortable taking moderate risks, but again, it's an up and down motion depending on what the government in the US says. So we're seeing an uptake in gold too. Excuse me. So I would trade with some caution, as a bullish confluence for the VIX means that gold is going up, but we're seeing bearish confluences right now. So just be wary of what the VIX is at. It's at 16.5, which is in risk on territory, which is good for indices, bad for gold, or bullish for indices, bearish for gold rather. Fundamentals for today are minimal, thankfully, after an extremely choppy week of fundamentals coming out of USD. Definitely a good week to go back and check, hey, and actually just analyze the movements. In fact, let me just show you the calendar quickly. So yeah, just want to show you the calendar. So yeah, we have orange for the USD news, but take a look at the news that we had. And Tuesday, Wednesday, Thursday, USD news. And at that particular time, there was massive movement in the indices and gold. So definitely something worth checking out and, going back testing, see how, okay, this news release, as it released here, this is the effect that it caused in the market. This is where the market dropped. This is how it recovered, etc., etc. I think it's very important to understand the subtle nuances that actually go into these fundamental news releases and how they impact the charts and the charts that you're trading. So yeah, just hop back onto the charts quickly. So in terms of headlines for the week, overall sentiment for gold is mixed due to massive drops and recoveries during the week, with investors also questioning market directionality in the medium term. Indices are highlighting the tariff implications of bringing in bearish pressure, but also highlighting the modest gains that we had during the week. I mean, nobody's really highlighting the massive highs, not even massive highs, but the highs that we did create with Nas100. But again, that is a point to notice that despite the volatility of the week, we did create new highs within Nas100. So definitely go check out those headlines and see what type of role it plays within your analysis and if it supports the confluences that you have within your strategy. As always, this is not financial advice, but my personal opinion on the current state of the markets. Before taking any positions in the markets, please make sure to do your own research first. And like and subscribe for more comment. Like and subscribe for more content. Comment on what you'd like to see more of in future videos. With that, traders, today's Friday, so I wish you a successful rest of your trading week, and we'll be back again with the weekly flows video on Monday. But with that, have a lovely weekend. Hope you end the trading week on a positive net profit, and we'll catch you in the next one. Happy hunting, traders. Cheers.